letter distribution that they came out with after that complex down in Florida fell down. I made a couple of quick flyers for FHA VA lookup. What else have I done? I printed out what the checklist is for a spot approval on an FHA deal. So they're up here. I've only printed out 5 of them for each. I can easily print them for you guys after the class as well. And I can share them with you too via email. So all of it is there. I don't go into these flyers specifically in the PowerPoint because they're just so long. There's no way we could just sit here and go through all the flyers. But would it be probably helpful for you guys to just read through and see what does this mean? And you can come back and talk to me after the class, or sit around after the class, or even tomorrow or the next week as well. Hey, on a condo cert, what does this mean? Right? There's a lot of stuff that's internally in these condo certs that you might not know. I touch on some of them, insurance phases, insurance kind of things, but that's just my one caveat. They're all up here. And as I go through the presentation, I'll probably just kind of hand out the examples, and maybe less you guys can share back there.
Can you give it to me? I'll just go make some copies.
It's okay. I printed them, and it's very easy. There's nothing on them that will be required of us to look at as we're going through the presentation. It'll just be something to supplement after we talk. Totally. So I'm going to start. This is called Catching Up with Condos. Really, condos have perplexed people forever. They perplex me. It perplexes other lenders. They're hard to lend to because they require so much of an HOA. They require so much cooperation from the HOA. So, and they're kind of evolving, right? They evolved after this place fell down. Some keep getting approvals for the government loans, some do not. So it's something to just keep up with. And as deals are a little bit harder to come by, we definitely need to expand and get into condos, right? So that's kind of the impetus of this presentation. I've received probably a call or two a week over the last 2 months, scramble calls like, hey, I can't get this deal done because of this new question that's come out. What can you tell me? Things like that. So that's why I started.
Sorry, we're just looking at the table.
Okay, no problem. Doing a condo presentation.
Excellent.
Yep, I'm one of the lenders in the office. Okay. So if you guys want to sit in, you're more than welcome to.
Thank you.
So this is a little rudimentary, but it's just to refresh. Condo, privately owned individual unit within a community of other units. Condo owners jointly own the shared common areas. So one of the things that I'm going to have Darian come up and do for me right after this is go in and look at a property profile. Every time you get a listing, every time you have a buyer that wants to buy a house, I'd recommend you go and you see what the use code is. You see what it's called. For condos, there's all these different ways when the builder built it and how the city and how the county let them call the place, right? Is it a condo? Is it a PUD? Is it a single family? And there's these secondary terms that I use, like a single family attached, or is it a detached condo that matter, right? But if you're doing a transaction on a condo, you definitely want to know it's called a condo from the title perspective, okay? Especially when you come to me and you do a loan with me, or you do a loan with Mike, you need to tell us, hey, this thing is a condo, right? Because if it's a single family, the pricing is different. If it's a single family, you don't have to do all this stuff for the government loans. You don't have to be approved with HUD for the FHA. You don't have to be approved through the VA. If it's a single family, they can just do the loans. But if it's a condo, you definitely have to be approved. The condo has to be approved for FHA. The condo has to be approved for VA. So it's really important to know what this property is. And you can't just know it on face value, right? You walk up, and if it looks like a condo, it might still have been considered a single family. If it looks like a single family, if it's a condo, or if it's a single family, or if it's more like a townhome, I guess. We don't use this term. Darren doesn't like this term, but if it's more of a townhome, sometimes it's considered a condo, sometimes it's considered a single family. So really, really important to look it up. And those are just some other definitions. I'm not going to read into them. but this is what the property profile system that I use. This is one of my clients. This here is the most important part, this use code, right? It tells you, bingo, this place is a condo. It's on Virginia Road. You guys might know this complex. These property profiles tell you other things that are really important too. When it was built, what the property taxes are, you know, past history. You can dive into these. I know the realist in the MLS does this as well, right? So a lot of the agents use the realist instead, but I always will quickly dive into my property profiles on all my deals just to catch things too, right? Like it tells you who the owner is. Maybe I blocked it out, but what if this isn't the name of the person that called you? You know, something to just catch. Like a lot of these, they're just really helpful to quickly get, and it's easy. Darian's going to show you how their website quickly works. And I hope I can do this.
You need to change tabs on your computer because it's not open. It's a one of your tabs is open.
Okay, let's escape. Let's exit this. How do I do that?
Just stop share.
Stop share.
Yeah.
Okay.
And then minimize that so we can or open up one of your other internet connections.
Got it up.
There we go. Let's see, now we want to minimize that. And there's the tab right there. And I'm not going to go too much into this because I can do that separately. I don't want to take that time up. But when we get calls, there's actually 3 places we look to check for condos, not just the use code. We want to, well, in Orange County, it's really easy because in Orange County, anything that's condo starts with a 900. That's like in the 900 series. So it would be 938 dash whatever.
That's
so,
the APN.
The APN, yes. The APN. Okay. So it makes it really easy in Orange County. It will begin with a 9. But what we like to do is double check because our use code sometimes, if it's not there, if it's not showing, where we usually also check is legal descriptions, because the legal description will be a condominium, you know, surmised of 126 interest. There'll be a condo plan. And then also we will check loans to see if it has a condo rider or a PUD rider, if it gets into the gray area. PUDs, planned unit developments, are treated as single family residents for all intents and purposes. So do you have an address that we could punch in?
So you don't live in a condo. You can just plug in my address, okay. 2879 Regis Lane.
And what is this?
Costa Mesa.
So it's Orange County.
Yeah.
You don't need to punch in much. You just kind of less is more here. County's important or zip code. There we go. So right now we're looking and it's a 141. So we're going to assume it's probably not a condo. We can create the property profile right here and we'll get the full profile because we want to see everything. I don't need to look at, you know, all the comps and everything, but we do want to make sure we have everything here. And I'll continue. I
actually just sold my house. It's not going to show my name, but
that's okay.
Yeah.
I can still use it. New owners, then we come down here. So we don't usually have a use code here because sometimes that gets, here's the use code. So this is a single family right there in this portion. And then we would jump down to property history, which is, whoops. Property history, which brings us to the documents. And we can look at, we know it's not a condo, it's a single family already because we see that it doesn't start with the 9. And we'll look at the legal description. Do we have a condo we can pull up so I can show the difference?
Yeah, we can pull up the other one I had.
Okay, because this will just be, you're gonna see just a basic, simple.
You have to go back to my presentation to get that address.
Is this like information agents have access to or only?
Yes, this is absolutely, this is free for you to use. I just need to set you up with an account. We just set you up and you have access to this immediately. So yeah, so here it's a real simple lot and track number. And that's usually a good sign that it's gonna be a single family.
That's the whole point of bringing her here is to show you, hey, this is what you guys can do to, you can look up any property, you can look up any county, you can look up all over the US. You know, it's not just around here.
Yeah, we have access to most states.
So, and it's so quick.
Do you have a condo address that I could pull up? Okay.
141.
141?
Playa.
Playa,
Circle,
and what,
Orange County.
Orange County? Okay, so immediately you see that it's 934. So that is the first clue in Orange County that it is a condo. LA County, unfortunately, it doesn't do it. Orange County is the only one that has the 900 series for their condos. Once again, we'll pull the profile.
Is equity something that we can see as well, like how much equity they got on there?
You won't see equity, but what you can do, and that's a whole nother thing within here, is you'll see where the loan was taken out and what date it was. So you'll see how long the loan's been. And we do have like a mortgage calculator to show like how much they have left. So it'll show you what's left versus that. You'd have to do some calculations. It's not going to say, you know, they have 50% equity. You'd have to do some math looking at when they took their loan out, you know, what they've paid and what the estimate is of what they still owe.
Does it show if they've done a refi as well?
Yes, so when we go into the property history,
all the transactions.
it'll show the transaction history. I also like to say when you are taking a listing, sometimes it is good to contact us directly. Sorry, I keep hitting this share instead. There we go. So you'll see the sales, you'll see the release, so you know that they paid off a loan, so it'll show what's open. If you contact us directly, we're going to do a deeper search, so you're not going to have to look at everything that's happened. You're only going to look at what's actively pertinent to your transaction. It'll also show if there's percentage owners. It'll also show solar, you know, more of the things, any list pendants. Sometimes that shows up here, sometimes not as much. So I always think it is good to double check with the title company when you take a listing to make sure you have the right people. And be careful with realist, because that's human entry. So a lot of people say, well, realist says. So just remember, realist isn't the most accurate when it comes to their information, because it takes a person to enter in, where we get it directly from the county.
That's important to realize too, from an MLS perspective, when you're looking at listings, right? You're looking at a listing, someone says, yeah, the place is VA approved, or yeah, the place is a condo. They could just be putting it in completely incorrectly. So you need to do your own research and come back and do this for even like the buy side stuff, right? Like you have a VA client, it says condo, you look at it, or you have a VA client, it says SFR, you look at it, it's completely wrong. You could have missed that one for your client. So do the quick research using these property profiles. They're super, super helpful. Where does that one show the condo though, that you just were up as?
Oh, and the characteristics, use code condominium.
So is this always either just going to say condo or SFR? It's never going to say PUD?
I'd have to pull up a PUD to double confirm, but usually we just say SFR. Like traditionally, yeah, I'll double check. Yeah,
see if we can find one that says PUD. PUDs are able to be done FHA, VA, not without any restrictions. They're considered SFRs from a lending perspective as well, from the title perspective.
Right.
Okay, so PUD works, SFR works. You don't have to do all this extra steps that I'm going to go into from looking up for the FHA, VA afterwards.
So this is where we would look. So not only do we look at the legal description, we look here, we see that there's been a condo rider on it. So that tells us it's a condo. Let's look at the sales. Can't do it.
I got to jump back into mine.
Okay, sorry. Yeah.
Right.
So yeah, and I was going to just so that, and I will get out of your hair here. Okay.
But it's really cool to have access to. I mean, all the title companies have these. Okay, these guys are just here in front of us. They answer their phone every time. They help. They're very helpful, and their service is the best, and their system is the best as well. So
this is the legal description. So this, when you see something like this is also a big sign. We have a giant description. It talks about the condo plans, conditions, CC&R. So that is the other place you're going to check. When you have a legal description like that, that's also a good sign that it's a condo. So with that, I will close these out for you and transfer over. And if anybody has questions, if you don't have an account, I can get you signed up. We did sign a lot of people up, and it's just your first and last name, capital first initial of your first name, capital first initial of your last name, no space, username and password both. So OC Title, you can get in and do that. So If you don't have it, I can easily get you set up with one, and you go back and share your screen and know what to do next.
Yes. Okay, so what I'm going to go into is a quick overview. Now that we've gotten past that, we know how to look up what the property is. Okay, very important to know how to look up what your property is. Real estate 101, but a lot of people don't do it, right? So it's going to save you a lot of time. One thing to remember is condos typically come with a higher interest rate than a single family does, with less than 25% down. Okay, there's an added price, an added expense to the rate that we have to apply with someone putting less than 25% down on a condo purchase. Okay, just you may get a client that asks you, why is my rate for a condo higher? That's what you say, right? Without diving into that. Okay. Condos require certificates. Condos require an HOA cert. It's how it gets abbreviated. There's full certs and there's limited certs. I'll go into what the difference is. I have printed copies of a limited cert and a full cert, so you can look at them. Okay, we will give you those. If you're doing a government loan on a condo, that needs to be approved. VAs get approved usually when the complex is built, and they keep their approval. There isn't really a renewal process for the VA. So if the thing was approved at the VA, it stays approved. FHA, the HOA has to go through and continue to update. So when you go into the FHA website that I'll show you, you'll see that they were approved one time, but then they got expired. And now the lazy HOA hasn't redone it again, okay? I don't know how involved, honestly, the process is. I think it's just a matter of supplying a lot of the financials, and I don't know how long it takes, to be completely honest. Mike, do you know how long it takes?
Yeah, it can be done like within a month, but it is heavy on financials for the HOA.
Yeah.
I believe there's a cost associated with it.
Okay.
I got told it was about 6 weeks.
That's
Okay.
6 weeks, yeah.
And usually the HOA just doesn't want to do it.
Yeah.
They have to
Exactly.
dig back
There is a lot.
so deep. They want all the financials.
Totally. Yeah, and that's the problem.
Yeah.
Right? And the alternative that I'll dive into is a spot approval, and it's the same thing that people just won't do it. So don't count on them, is I guess the point there. Warrantable versus non-warrantable condos. Warrantable condo means that Fannie Mae, Freddie Mac will lend in it. Non-warrantable means they will not. There are loans for non-warrantable condos. There are alternatives when the place is not something that Fannie and Freddie will lend on. Okay. Yeah.
What's the best way to figure out if it's warrantable?
That's part of the HOA cert process. That's part of the whole, like, it's hard to know up front, like if you take a listing, whether it's warrantable or not, without getting into the HOA cert and knowing how those answers are going to come back. But I'll dive into what are a lot of the issues of what turns a place non-warrantable. Occupancy, if the place has some commercial space, HOA delinquencies. What might benefit you from a listing agent perspective is to get an HOA cert and then run it by Mike and I and see if we can't pre-flight it and say, hey, would this place fly or not? Or if you go on and you look at past transactions within that complex, and you can see who did the loan, you can see if it was a Fannie Freddie loan or not, or you can call the listing or the buyer's agent from that past transaction and say, hey, did these guys get a Fannie Freddie loan? That would be case in point to know that this place is probably warrantable. A lot of things you can do there, but basically it's just, is this HOA, are we willing to lend to this HOA? I just said condos generally have longer escrows because of the HOA involvement. It comes to me and you want a 14-day transaction on a condo, please don't. Okay, because it's not just me, right? It's definitely not just me. It's the HOA. There's a lot of things, right? I dive into quickly what the aftermath of that place out in Florida is, and then I give you some quick solutions and what current rates are. Okay, there's going to look like a lot of info on here, so sorry I didn't pare it back. But HOA cert, form that's filled out by the HOA. Talks about minutes, it talks about financials, it talks about budget, it talks about occupancy, it talks about a lot of things, okay? Here is an example of the full one. The banks have different,
yeah. It does show it as a PUD.
Which
on
one?
the use code.
Oh, it does.
So I pulled up just the Bixby Village, townhome in Bixby Village, and it
Oh,
does
cool.
pull up as a PUD.
So good to know, right?
Yeah.
When you guys are searching on there, if it shows a PUD, you know, hey, I can do an FHA VA loan on it without any question. Okay. But the HOA cert, it's important. It's always needed on these deals. There's a lot of questions. HOAs charge us somewhere between $250 to maybe sometimes $700 to fill this stuff out. Okay. And
I am actually on the Zoom training with Alex Scurr, and I was wondering if you could do me a huge favor and grab his handouts and put it in my mailbox since I'm watching it on Zoom. Oh, okay. Thank you. I really appreciate it.
Sure.
All right. Have a great day. Thanks.
This is a full cert that I just handed you guys. Okay, it's 8 pages, very long. The full cert is what just got a couple pages added to it from the Florida thing, and I'll dive into that later. The limited cert, this is just one from the bank, one of the banks that I use, is about 5 pages. Example of a limited cert. Right, a limited cert. That's a full and that's a limited. There's not much difference, but the limited cert won't necessarily touch on HOA delinquencies. Okay, so if you have quite a few units in there that aren't paying their HOA dues on time, Fannie Mae, Freddie Mac won't into that complex. But if your client is able to put 10% down or more, we get a limited cert and we can get around that. Okay, so that's one of my solutions I present later. Limited cert doesn't necessarily require the full expansive budget review. Okay, so another reason to, as a listing agent, to potentially want to start to accept offers on condos with 10% down or more. If you got it, it's going to be an easier deal. But condos are generally first-time style home buyers with less down payment, so you're kind of in a rock and a hard place. But just thinking about it, it's going to be probably an easier deal with 10% more down because you get a limited certificate from the HOA usually. Okay. It's very important though. HOA cert is very important. I would probably get them before or when I take the listing, honestly, just to know what you're up against. Mike and I'll review them for sure. Why deals get turned down based on the HOA search. Occupancy, this is one thing that always comes up for some reason. People think that if it's not 51% owner occupied, you can't do a deal in there, okay? If the client is buying the property as a primary residence, the occupancy doesn't matter, okay? They're buying in there and it's 85% non-owner, but they're buying it to live in there, it doesn't matter. I can do the deal, okay? When it does matter is if they're buying it as an investment property. Then you have to have 51% owner occupancy in there. Okay. The bank then doesn't want to add to the ratio at that point. You guys got that? And that's part of the HOA cert, right? So the HOA cert is going to tell you how many active absentee males there are. They ask you how many people don't live there. And you know that's where you would then come back and you get upended if the client's buying as a non-owner and they answer the question, hey, we got 60% non-owner, that's a non-warrantable condo. Okay. Single entity ownership. This one comes up a lot. I just dealt with this, and this would be another reason to then go over to the non-warrantable condo style loan. These are worth writing down. It's based on 21 units. So if you have a complex 21 units or more, for a Fannie Mae loan, 4 of them can be owned by one person. For a Freddie Mac loan, 5 of them can be owned by one person. Any more than that, and it's a non-warrantable condo. Okay. If you go and do a non-warrantable condo loan at that point, they're still going to have a single entity ownership, but they might let you have, 40% owned by one person. Each of those banks are different. They're more like, they're the same banks that do like the bank statement style loans and the debt service cover ratio, like loans that are non-QM is what we call them, okay? Another reason they get turned down is excessive commercial space. So on the HOA cert, if the HOA answers that there's 50% commercial space, they got 2 shops down at the bottom of your complex and it's taking up more than 50% of the space, not a warrantable condo. Okay, keep in mind. Late HOA dues, very important. 15% or less of the units can be 60 days late on their HOA dues. 15% or less. That's something that doesn't pop back onto the limited cert. Okay, so remember that. If you ask the HOA, you might just make a call to the HOA and say, hey, how is your delinquencies? You got a lot of delinquencies? Then we're going to have to do some pre-work before you take that listing, and you talk to the lender so you don't get in 15 days and you get opposed by the HOA cert. Litigation. Litigation is one that you guys have dealt with. Okay, the builder didn't do something right, or is there anyone that has litigation that they've gone through that can talk about?
It was in Pico Rivera.
Okay.
I was actually representing the buyer.
Okay.
And we didn't find out about the litigation until quite late on. And basically she ended up having to pay cash.
Yeah.
Because the garage was flooding.
Got it.
It was one in Long Beach that had the same problem.
Yeah.
And then I did have a listing in Lakewood on Centralia, and their HOA was in litigation. But what threw us off on that one is it's 2 towers, and one was 122 and one was 1220 or something like that.
Okay.
And it was only one side of the building that was under litigation, and our side wasn't.
Okay.
And that took us about 4 more weeks to figure that whole thing out to be able to close on it.
But you ended up being able to.
We ended up finding we had to switch a lender. We found another lender that would do it, and he went off at the fact that it was 2 separate buildings.
That was clever.
Even though it was one HOA, 2 separate buildings. But it was a nightmare. Plus we had COVID hit at the same time.
Yeah.
So I was dealing with COVID and this litigation that popped up.
Litigations are always a nightmare. Litigations are definitely always a nightmare. Litigations tend to end up needing non-warrantable condo loans. There just isn't, unless the litigation is, unless it's like completely remedied and you can show that all of the work has been done, and they know that there's not going to be an increase to HOA dues. They know that, that's part of the reason they don't want to lend to there, is they don't know if all of this fixing isn't going to change the HOA dues, increase the client's debt to income ratio with assessments, and then this guy or gal doesn't qualify. Okay, so you can ask the HOA, call them, hey, you guys involved in any litigation? Another great question. HOA dues late, you guys involved in any litigation? How many mail-in owners do you guys have? Those are all great questions just to ask when you guys are potentially taking a listing, to know what kind of work it's going into. Newer one that's more popular now that's turning things down is the condo tel or short-term rentals. Banks don't want to lend to a complex where a lot of the owners are now turning their places into Airbnbs and VRBOs. They're going to go on to Airbnb and they're going to search for sure. They're going to see if there's a bunch of condos in there that get listed on Airbnb, and they don't want to deal with that. Okay, so keep that in mind. And then this one comes up on the HOA cert. They have to make sure that 10% of the monthly dues they're receiving are going into the reserve account. Okay, and that's part of the long one that I gave you. It shows, and it's just asks a straight up question: are we putting 10% of our monthly dues into the reserve account? I don't really want to go into this one, to be honest. Yeah. Sorry.
This is why we're here.
Yeah.
We do.
There's weird insurances that these places have to have. The main one is they need to have $1 million of coverage. Okay, that's the one to hang your hat on. Replacement coverage, $1 million. Liability insurance less than $1 million, they won't do it. Okay. This one comes up sometimes, called Ordinance and Law Insurance. Basically what that means is if the complex was built in 1950, right, they have to have insurance that will, if there's a loss, allow them to update the complex or update the unit that was busted with new materials and new up-to-date standards and new up-to-date codes. Ordinance and Law Insurance allows them to do that. Okay, it allows them to. It allows the bank to know that the rebuild is going to happen based on new codes, based on new mandated materials, based on new laws. That's what that is. If they don't have that, the banks don't want to lend to it, right? Because they just gave them 400 grand on a place that if it busts up isn't going to be worth 400 grand anymore. Okay. Mechanical breakdown has to have that if the complex has central air and heat. And then another one that comes up a lot is fidelity bond coverage. They have to have a certain amount of checks and balances within the HOA. They have to have, like, one person can't just be running, signing all the checks, sending all the money to people, just doing the whole thing. There needs to be some checks and balances, and that's what this fidelity bond coverage is all about. And they'll go into it on the full cert. You'll see there, it gives you 3 different ways to address the fidelity bond coverage on the full cert. Okay, FHA, VA. These come up a lot. I've given you the links. I could send you all this presentation, but I've also built these flyers for you. Here's a VA one. Here's an FHA one. I'm not going to have enough for everybody, but I will put more out. Okay, these are the links. The websites are not awesome. Okay? I'm just going to admit they're hard to navigate. They're not great websites, and the whole way to think about these is less is more, and it's just going to require a little bit more work for you in terms of uncovering, but less is more. Okay, so we're going to go to this FHA one right now. You share. So that's the link. This is the FHA condo lookup. Okay, everyone's with me? Should we go Long Beach? Make sure not to hit spacebar right here after you type in. Swear to God. Yeah, it won't come up. So if you hit spacebar right after this, it's not going to work. Okay. And then you just hit the state. That's generally what I do. Okay. And you hit send. And all of the ones in Long Beach will come up. And I just start going through them.
What is that for exactly?
This is to see if your condo complex in Long Beach has been approved to use an FHA loan. Okay. But you look over here, this place on Ohio Avenue, it's rejected.
What just rejected me?
That means they tried and they didn't want to do it because there's too many HOA delinquencies, or there's too much commercial space, or there's some reason the FHA.
It gives you the reason, right? Because it says register single unit, and then the other one says missing documents.
Yeah, I mean, I wouldn't trust it necessarily. Yeah.
It has that particular building. I know it has a huge amount of commercial underneath there. Only because I sold a unit in there many years ago. Thank you very much.
Yes, yes. But that's, so here, we get there, and honestly, instead of trying to minimize the results, you're gonna be better off just going as broad as you can and going through it. Or calling Mike and I, and we'll go through them, right? That's where you're gonna have success, both on the FHA and the VA website. I promise you, okay? So you come in, let's find one that is approved.
I think on the first page.
Yeah, here, 838 Pine. Does anyone know this one?
Yeah, actually.
We do.
Yeah.
Cool. They can do FHA loans.
That's on the other side of your old building.
My old house.
Yeah. With
Yeah.
corner balconies. Yeah, it's a nice place.
Okay, but you do see here, there's not a lot, right? So find conventional buyers for condos is the takeaway, but deals are hard to come by. So this is the website. The website is on the form or the flyer I gave you. The website is in this presentation. Go play around with it. we're happy, Mike and I, to look them up for you. Hey, I have these 5 condo complexes that I'm going to show my client this weekend. Are they FHA approved? Are they VA approved? Send them over. We'll look them up. But if it's 9 o'clock at night and you want to look it up, just do it yourself. And here's the links. I give them to you. Right?
Don't call me, call Mike.
Yeah, call Mike. Yeah, he stays up later than I do. I got 2 young kids. Actually, probably awake at that time.
Why is there? What's
this is one that I just found, believe it or not, when I was putting this presentation together. I've never seen this, but this is one that comes up. It appears someone has aggregated all of the condo complexes in California that have been approved for FHA. Do I completely trust it? No. I do not. But you go in here and you go,
91356.
91356. And it says 12 condo complexes are FHA approved. Nope, sorry, expired. Tarzana Courts is. Tarzana Gardens. Is it shared? Okay, so this one's cool, but I would do both. The other one is HUD governed. The other one is the better one to use. Okay.
It's all in Jersey. Okay.
Was that the address?
You provided.
Yeah. So this one.
That's my upcoming listing.
Got it.
This one you have to enter in the zip code, right? So. Just one in 90808.
What, 9803?
More condos in that one. Expired. Just one. Chat 2. There we go. Okay.
Now, if they've been expired, is it easy to get them reapproved just because somebody hasn't done it?
They have to go through and do the whole process.
The whole process.
Yeah.
There is a service out there that will do it for the HOA. I mean, they charge the HOA to do it. And I know I have it buried on a text message somewhere.
Yeah. But
they will actually step in and do it for the HOA. I think they said again it takes about 4 to 6 weeks, and there's the fee to be, to get back qualified, and then they charge a fee to the HOA to do the paperwork for them.
I looked it up. It's like between $1,000 and $2,000.
Yeah.
On Zoom, what Penny just said is that there's a service that will do this for the HOA. I just Googled get my complex FHA approved, and I think the company was actually in Huntington Beach, to be honest, when I looked it up, but it was years ago. But they'll pay. The HOA can pay for the service to do it. I mean, it's worth it because it opens the buyer pool so much for the HOA. So I would, if I was, on the HOA board, I would try to talk them into doing it. So keep that in mind. Okay, let's go back. Let's figure this out. Okay, better. Yes. All right. Here's the VA website. This one is even harder to use. Okay.
Anything with the VA.
Yeah.
Is that
this
LGY?
one, yeah, there we go. And this one is even more sensitive with the space bars and everything. Okay. VA website. I shared. Zoom, you got me. VA website, again, very much so, less is more here. And I mentioned at the beginning of the presentation, the VAs don't fall out of approval. Okay, so if they got the VA approved when they built the place, it should still be approved. $263 results in Long Beach. Okay, one thing to point out, very important, that then goes back to my whole Darien property profile piece. is that the VA is not always going to list the name of the HOA here. Sometimes the VA will list the tract number, TRACT, tract number, okay? So you can go through and you can see, let's find maybe, it's more towards the end where we don't have names. So you see, these are all just the tract numbers for that complex. And this is what you would look up and you would say, okay, let's expand this. For some reason, my place falls into tract number 30730. It's accepted without conditions. What has to happen is the appraiser, that when they do the deal, has to list the tract number exactly as this. And then that's where the bank will then go back into this website and confirm that the tract numbers coincide. And that's how you know you have an approvable deal, right? Okay, so don't just, if you can't find the name of the complex in the VA website, don't think you're SOL. Go and find the tract number and then come and look it up. It's obviously towards the end because the thing is alphabetical. Anything to add there, anybody? Okay.
Actually, question.
Yes.
Do all single family residents qualify for VA?
Yes.
Oh, no
yes.
exception.
There's no exceptions. Single families, PUDs. Single family attached. Okay. If your house is attached when it's considered single family on the use code, I can do a VA loan there. Okay.
But there is a condition.
But there is
It's the
conditions.
condition of the home
Yes.
You can't have cleaning paint.
or no heating system.
They can't have windows blocking out because it's got riddled with termite or the roof is.
The VA loans have to have a clear termite report. No hands,
No
no
matter who pays
questions.
for it.
Yeah. Some banks actually Quicken will let the client pay for it out here in California. That we do. We have them as one of our places, but some places won't let the client pay for it. That said, they're a little bit more restrictive, but the rates are incredible. There's no mortgage insurance, and it's honestly one of the only benefits that from being a veteran, right? Like, it's thank you for your service. We let you buy a house with no down. The least, I heard this one time that the loan that defaults the least, believe it or not, is a VA loan. For obvious reasons, right? These guys and gals go in there and they get whipped into shape and they pay their bills, right? So, and they have zero equity when they start, but they still default the least, okay? So something to be said there. Support them, accept their offers, right? Think they got great credit usually. The loans are really easy. The debt to income ratios go up to like 65% sometimes for these guys, for us, okay? So they're usually easy deals. It's a misnomer from a listing agent perspective on VAs, I promise you. And please don't, to keep it going. What else do I got here? Let's go back. Next slide. Share. There is a cert form for the FHA. I thought I printed that out, but I didn't. Sorry. Form 9991, very similar. Okay, it's already been approved to do loans in there, but they're going to double check you. They're going to double check that since it's been approved, there hasn't been an addition to late dues. There hasn't been an addition to single entity ownership. Okay, so they're going to double check, even though it's been approved to do an FHA deal, you're not completely out of the weeds. Okay, they have their own form. HUD has their own form called Form 9991. The reserves get reviewed. The insurance gets reviewed to make sure that it's still up to par. Okay, so keep that in mind. What are spot approvals? Anyone know what an FHA spot approval is?
For that particular unit.
Correct. So your complex is not FHA approved, but you want to do an FHA deal in there. It better be a listing that has no other offers on it and that they need to just, accept the deal, because you have to get it accepted. Then we have to go through, get all of the documents that an FHA approval would necessarily need to do the spot approval. They won't do that unless they have the offer accepted, but it's doable, right? So as more inventory comes around, if this is something that you want to consider, let me know. We can show you what they are, but it's essentially getting an FHA deal done in a complex that's not FHA approved. They just approved the single unit. Okay.
Is it the same amount of work as this, or is it less work than getting the whole complex approved?
It's a good question. I think it's a little bit less work,
yeah,
but they still have to send us the budget. They have to send us the reserves. They have to send us all the financials.
It's kind of like, might as well get the whole thing.
Might as well.
Yeah.
Totally.
The more involved your seller is with the HOA, better. Because
Totally.
if you know, if they really are on the board and they want to get FHA, they will push for it.
This is the list.
Oh, okay. Thank you.
Let's take a look. So this is this lender letter that is maybe worth reading. It's up to you guys. It talks about the collapse and what now is needed. Okay, so it's not what goes on now because of the collapse in Florida is there's an addition to the HOA cert that just talks about like the structural soundness of the building. They ask you if it's been inspected by an architect, an engineer, or any other inspector. And did they find any safety related issues? So it's just it's an added component to the FHA or to the condo cert. But just, I mean, it's arbitrary. The HOA can answer them and say yes, right? It's completely arbitrary, but you know, I don't think they would do that. But it asks, you know, is there any structural defects? And if anyone says anything remotely close to yes, it's going to be a non-warrantable condo. Okay. So that's what happened. The place out in Florida fell down. You guys are all aware. I thought this was interesting that there's 355,000 condo associations that house some 74 million people across the county. So condos are important, right? That's what that means to me. Condos are important. Condos are clients that then buy single families in 5 years, right? So they're double deals for you guys. Okay. So keep that in mind. This is on like page 7, 8, and 9 of the full cert that I gave you. Solutions, current rates. Okay, solution to the reserve not being up to par. You got to find a client with 10% down, right? Single entity ownership. That's gonna jam you up every time, regardless. Okay. What else? What's the limited cert? What did it get around? Got around the reserves. And let's go back to that one. Non-warrantable condo loans. So if someone comes to me and they say, hey, I have this non-warrantable condo, what does that mean to me? It means that I have to go find a bank that, again, is kind of considered non-QM, where they'll do a loan with a higher rate, most likely on an adjustable term, 5 to 7 years, and they might have to pay extra to get it, a point or so, but they're doable. You come to us and you say, hey, this complex has 40% single entity ownership. Can you find a loan for it? Can I find a loan for it? Okay. Depending on what kind of litigation it is, will be dependent on if we can find a loan for it, but generally, if you come to us and there's some litigation, you can probably find a loan for it with a decent down payment, okay? So don't just completely throw it away, but know that what you're up against, or know what the client is potentially going to receive, is a less sexy loan. That's it. Get them in. Hopefully the HOA is rectifying everything, and then you can come back and you can put it on something better after the fact, okay? Obviously, no FHA or VA approved, just you need to switch them to a conventional loan. We can do conventional loans with 3-5% down. So it's not a down payment issue. Usually the conventional loan just might have a little tighter debt to income ratio. And, but really, you know, like the reason FHAs and FHA loans are nice is because someone with less attractive qualities can still get a decent rate. That's why we do FHA loans. Someone with a 620 score can still get a relatively good rate on an FHA loan. Someone with a 620 score on a conventional loan, putting down 5%, their rate is through the roof. Okay, so that's why we do FHA loans, and that's why a client would benefit. You know, a lot of the time these condo buyers are going to be your first-time buyers. Their credit maybe hasn't been established, and it's not as good. So we need to have FHA access. Okay, just really hard. I got a bunch of pre-approvals for FHA condos right now. It's just really hard to get done. So know what you're asking. Yeah.
Would that be like the added contingency in your offer, or is that covered under like your inspections or the lender's approval of the complex?
It's in your loan contingency. So you need to retain your loan contingency until my HOA cert is approved. 100%. And that doesn't always happen with you guys.
But you, meaning as the agent, you wouldn't add it in your contract.
You could, but there's no need. You need to just say
covered through your loan.
It's covered through your loan. If your loan, they can't give you a loan if the condo complex is not watchable.
But you may have to extend your loan contingency.
Right.
You know, you still put it in at 17, but we all know we may get to day 16 and you may have to go back to that seller and ask for an extension because the HOA is taking their sweet time.
Yeah. It happens a lot.
It happens a lot. It happens on my son. We just have to extend until we've got the HOA cert.
And they get reviewed really quickly, right? Like all the banks that we work with have separate departments that only do condo approvals, right? So they'll go and they'll say, yeah, this condo is approved. And we can get them early, but it's, again, not on us. It's on the HOA turning around. There's a lot of services now, like there's one called EOI Direct that gets the insurance. There's a lot of complexes that have their HOA certs, or a lot of the banks that retain the HOA certs from previous deals. So now they know that that complex is already approved. Okay, so we can look that up for you with the banks that we work with. But just from a planning perspective, don't write a 10-day loan contingency on a condo, right? It just won't work.
Or no loan contingency.
Or no loan contingency.
Yeah, you screwed somebody.
Yeah, because you don't know what's happened from the HOA. Even if you saw a conventional or an FHA deal close there a year ago, you don't know what's happened.
But can you add both? Can you say, okay, no loan contingency, just to get your offer accepted, but add if the condo is not warrantable, that's a contingency.
I think so. I don't know. You'd have to ask. That's more of a real estate contract question than an Alex question. But it's a great question. It's for sure, and it's something that I would consider. Yeah, definitely.
The buyer's not the issue.
Yeah.
Property.
The loan looks great. Right. They got great down payment. They got great assets. They got great reserves. They got great income. But if this HOA isn't approved, we have to have a way to get our money back. Right. And you know, I essentially just do loan contingency. But if you want to do it that way, that's fine. Here's some rates. They're up, but they're still good. I priced out a conventional loan at 4.875 today. Actually, that was this one. This top one. 15-year loans are still good, down in the fours. And then this is the FHA loans. You'll see like those rates are still really good, still really low. They're back, right? They're back, and they have the mortgage insurance to help them out. That's why those rates stay low. Okay, so hopefully this wasn't too much info for you guys. Keep at it. Are there any questions? This is it.
I have a question.
Go ahead, Jeff.
For that Cal HFA new program where they give you 10% down, could you use it on a condo?
I don't do those. I don't know. Do you do those? No.
Can you find out?
I can find out.
Is that the down payment assistance thing?
Yeah, but it's a new one that they just started where they give you 10% down and it's a silent second. So if you have a complex that you need 10% down, wouldn't that be an option?
So that's the one that based up there.
Yeah.
Yeah. It's really low for Southern California. Like it's like most Southern California.
The 80% AMI is 68,000. So you got to think about if you're trying to purchase a condo with HOAs, that if they have to essentially have.
So the minimum or the max that they can make is 68 grand. So they only make 68 grand. And you're trying to buy a condo around here with an HOA. Unless the client has like 50% down, it's not going to work. So then that program is.
Well, they can't buy anything then, right?
But where it will work is going to work like in Central California, like where the values are down. In Southern California, I think the prices are too high based off of the rate
Gotta have clients with a little bit of down payment, some income, some
Skin in the
decent
game,
credit.
yeah.
That's what we're after.
Yeah.
I mean, those offers are gonna be hard to get accepted today, right? Maybe as things change, they might start to get accepted. But today, those offers are gonna be hard to get accepted. Time's better served. Phone calls are the leads before that. My take.
Alex, I do have a question. Do you know anyone that does Cal HFA that you and I can refer to when somebody happens to come across someone that could qualify for that?
I think that girl that used to work at here, Mary, does.
Okay, maybe you and I can.
Mary Shuck. Does anyone still work with her ever? You guys call her?
She's still alive.
She definitely still around. Yeah, I know Shannon.
I
Brad,
texted with her not too long ago.
Shannon Brad still call her.
Mary Shuck.
Before you came to the office, there was another lender in here, and it was Mary. She worked with Movement Mortgage.
She loves low income.
She is the, yeah.
Hey, don't knock her.
No, she's great. She's great. She speaks Spanish fluently, so that was a lot of the reason that we would refer deals to her. She's very she's a good hand holder.
What's her contact? Does anyone have?
We don't know where she works anymore, but he's got her number. This was I printed this out. I forgot to say it, but what came about from the place out in Florida was basically Fannie Freddie updated the condo approval to make sure that there's not material deficiency, significant deferred maintenance, or routine repairs and maintenance that's needed. Okay, so that's really what came about from that place out in Florida. So if any of those questions get answered, that yes, it's a done deal. Okay, and they're double checking that, pretty solidly. So keep that in mind. Anything else? Thank you, Darren.
Absolutely. This was great. Good information.
Yeah, get your.
I wanted to. Oh, got it.
Yes,
okay.
Yay, Alex.
Yay, Alex. Thank you.